Good morning, ladies and gentlemen. My name is Alex, Senior Account Executive at GDMFX, and this is today's European Session Outlook. We'll start with the North American markets. The DXY pressed to another three-month high Monday as investors shifted their focus back to the theme of monetary policy divergence, the idea that U.S. monetary policy makers will soon raise interest rates while the other major central banks continue easy monetary policy. The DXY is up to 98.08 from 97.97. Nasdaq 21 points up, which means that it again ended at a new all-time high. And today we'll be expecting the Redbook Index month-on-month and year-on-year. Alright, now the EU markets. German lawmakers gave their go-ahead on Friday for the Eurozone to negotiate a third bailout for Greece. The Bundestag decisively approved the move by 439 votes to 119, but almost a fifth of Merkel's conservatives voted no. German producer price index month-on-month, year-on-year, both came out with 0.1% worse than expected, and the DAX 30 is 50 points up. Today we'll be expecting the Swiss trade balance. Alright, on to the UK markets. The FTSE 100 moved up to a total of 19 points yesterday and closed at 67.40. It climbed for 8 out of 9 sessions. The 10-year gilt yields were at 2.061% yesterday, which was a slight decline. The biggest mover was against the New Zealand dollar, 28 points down yesterday, 33 points range. Investors are looking toward Wednesday's Bank of England vote hike, the minutes, and the inflation report hearings. Onto the Asian markets. Leaving the cash rate unchanged was appropriate. One of the main points from the minutes was that Q1 GDP readings have not carried over into Q2 and inflation pressures are well contained. Indicators point to robust economy growth. Also, in respect of the Aussie, the minutes said a further decline is expected and necessary. In Japan, we also had the monetary meeting minutes. The Bank of Japan will conduct money market operations, meaning that they'll be buying government bonds so that the monetary base will increase at an annual pace of about 80 trillion yen. And today we'll be expecting important Australian news. Royal Bank of Australia trimmed mean CPI quarter-on-quarter, year-on-year, consumer price index quarter-on-quarter, year-on-year, and Glenn Stevens' speech. Alright, for commodities, the highlight of today is yesterday's slump in the gold price, a huge $48 movement. We saw data showed China's gold reserves at half what the market expected, helped push prices to their lowest level in more than 5 years. Analysts also attributed gold sell-off to a combination of bearish price influences, including a stronger US dollar and investors' waning desire for gold as a haven. Silver had a range of 48 cents and ended lower. Crude oil had $1.30 range at 53.45 now. Thank you, everybody. This was today's European Session Outlook. I'll see you next time. Goodbye.